Hello, ladies and gentlemen. Today, I would like to introduce my most awaited and most, time spent work so far. When I started my community in on 3rd of August 2023, that's almost, I would say, close to less than over 3.5 months. I wanted to make this indicator, but before that, I've already released a lot of good indicators, and this is one of the best in the market. You can search it, and you won't find anywhere close to these indicators that we have. So today I would like to introduce my most prestigious and the most accurate support and resistance algo. So what is that? I'm going to discuss about what is the support and resistance algo, what are the, how to use it, what are the functions of the support and resistance algo, and, the most important part is, whether it works on every time frame or what. So I'm going to help you, give that whole knowledge of how this support and resistance algo functions and how to use it more accurately and get your trading to another levels, because this support and resistance algo is definitely going to help you if you are a noob trader, if you are I would say not exactly like a pro trader, but you are a good trader. And even if you are a pro trader or you are an expert or you are a professional, I would say this algo is perfect for you, because you don't have to draw levels every time on each and every chart. These algo just simply run it and it's gonna draw all the levels. And these algo is not a static algo, actually it's a very dynamic algo. And I think without further wasting time, let's go to the algo. So the 21 community, 21M community have been given an access to this algo. The members are given access. So if you would have gotten access, go to the indicators tab. Under that, invite only script, and you'll find our 4 indicators. TMV crypto divergence indicator, TMV crypto price action algo is one of the most best price action algo we have in the whole market. Crypto RSI screen. It's a very unique screener that we have. It's an RS. It finds RSI support and resistance levels and paint your candles so that it gives you accurate top and bottom, or it tells you where exactly the price might find top and bottom. Now we have the TMV underscore crypto support and resistance algo. So let's go to that. Click on the TMV underscore crypto support and resistance algo. As soon as you click it, it's gonna draw something like that over here. And when you see such sort of a thing, there may be a lot of levels and a lot of things over here, and you might find it's a little bit, I would say, more a lot of stuffs over here. So I'm just going to talk about it one after another as to what this TMV underscore crypto support and resistance algo is. So I've tried to make it more and more simpler for you guys. The support and resistance. So we have 4 things in this whole support and resistance algo. The primary is support and resistance. The second is Fibonacci levels. The third is volumetric candles, and the fourth is trend lines. Okay. These are the 4 things that we have for the or that we have under the TMV underscore crypto support and resistance algo. First of all, if we talk about the support and resistance, there are 2 things that you need to take care of or you need to understand. The sensitivity default settings are 3, and I recommend to keep it at 3 unless you really need more and more levels on your chart, or less levels, then probably you need to increase or reduce it. If you increase it, the levels will reduce drastically. If you go here, the levels are going to reduce it, and probably it's going to shift slightly here and there to give you more accurate levels. If you further increase it to 6 as well, it's going to literally give you like a big levels. It's going to reduce all the noise you have. So if you want more and more amount of levels, you reduce the sensitivity, and that's going to give you some more levels as well. If you just reduce it to 1, it's gonna literally, you know, get your chart to another level, and that's what I don't recommend. 1, our sensitivity ideally should be 3. That's what the default settings are for. Then we have labels. What labels are do we have? If you look at the chart, and every support and resistance levels, there are labels besides that. You know, the labels would be the price at which we have a strong support or resistance. That's like, this is the line that we have at 38,357. So and then you have a time frame. So what time frame you know, support or resistance this is, you know, like a 1 hour. And then you have rockets, and besides the rockets, you will see the count of rockets. So the bracket is the number of rockets, so basically how strong this level is. If the more number of rockets, the more stronger that level is, basically. So that's what the labels are for. So if you really want to have that labels, you can have it on. If you really want to you know, don't want to have the labels, you can just simply off it. Talking about auto buffer, we have a default auto buffer for this whole thing. So what is auto buffer? Auto buffer is, it identifies basically if you have a strong support here, the price normally don't exactly gives you a double top or double bottom, or triple top, triple bottom, or 4 times top, 4 bottoms, or 5 times top, 4 or 5 bottoms. It never gives you that. The price either have slightly up and then reject, or slightly lower than reject. That's the only you know, it can happen. Hence the buffer is going to add the level. So if you are keeping 0.25% buffer, which means that the price is going to have you know, it's going to have the box of 0.25% up, 0.25% down, and then it's going to identify under this box what are the resistance and support levels which are strongly forming by the price, you know. So that's what your auto the buffer means. Right now, you know, every time frame has different buffer levels. Like lower term time frame has lower buffers, high term time frame. The more the high term time frame, the more buffer you need to keep it. For example, for weekly, it would be wise to keep it like 3 to 4%. For daily, it's wise to keep it like 2%. For 4 hours, it's wise to keep it like 0.5. For 1 hour, you keep it like 0.25. And for 15 minutes and 5 minutes, you can also even keep it like 0.1 and 0.2%. So that's right. And hence, you know, every time, if you don't want to change that buffer percentage for various time frames, I have made an auto buffer where it automatically computes buffer at the you know, based on the historical candles, certain historical candles, and it automatically, you know, adjusts your chart accordingly, and that is going to get freezed for each time frame. So let's say for 15 minutes the auto buffer is going to freeze. For 5 minutes it's going to freeze actually. So your chart is not going to change irrespective of how the buffer is going to be. So I would say recommend to have an auto buffer. But let's say if you don't want to have auto buffer, if you just keep 0.25% on a 1 hour time frame, your chart is slightly going to adjust it, and you're going to get levels like it. You see, you got lot of levels over here. And basically, if you really want to have an auto buffer like 0.25%, I would recommend to have an auto buffer for like 0.2 because 0.2 is also very good. You don't want to have much much big levels. You see how the accurate 0.2 and 25% levels are. If you really want to increase or reduce the levels, you can have it for like sensitivity. You can play with sensitivity. You can increase it to 6 so that, you know, you don't want a lot of noises. You have some like big levels where the price can literally potential reversal happens. Even if you just have the auto buffer levels on, you will see that very close to those levels will form. These levels was there. The 36,950 levels was literally around these levels of 35,364. You just and probably, you know, you can just play with this buffer if you really don't want to have an auto buffer on. Now, a lot of people might think that I don't want to have boxes. I just would like to have lines. I just want to play with the lines. So basically what you can do is you simply go to the box here and reduce the opacity. If you reduce the opacity, there will only be lines over here for the support and resistance. So basically you don't have to worry about the box as well. You need the lines, you get the lines, and these are the accurate levels. You will get it. Even if you draw it from various time frames, 1 hour, 4 hour daily, or to even just look at the daily time frame, you will get a more accurate levels where the price has potentially bounced or reversed from and have proved over here 24,280, the way it was holding up, 16,200, the way it was holding up, breakout, flip, and the price pumped up. Similarly, you also have 30,980, the way the price has broke out of it with a wide, big volumetric candle. And also we have a strong resistance at 39,655, the daily levels that we have from these like 2021. So it not only computes the support and resistance based on the current levels or the current trend, it also captures support and resistance from the old levels as well. You see, this support was computed from 2021. Similarly, this was 2021. So basically, it literally scans for support and resistance, not only based on the current levels, but based on the historical levels, and tells you that, hey, look, historically, this is a strong levels. So we don't have a bias, and that's actually what we want to see. But it tells you that, look, previously, this is how the price have reacted to these levels. So now we have to be cautious, So this is if you just want lines, you can play with the lines as well. If you really want to have the 1 hour lines as well, you can just keep it. Look at how on the 1 hour time from the price perfectly rejected 3 times from 38,356. If you just look at the replay as well, I mean, you might feel that what if the price, the lines are not there? It's just, it's literally a trick, basically. No, it's not a trick. Even if you look at here, the price literally bounced off, literally bounced off, and we were having 2 levels. If the price, this was like a flip over here, if the price come back to 36,950 retest, I would literally like to long it towards 38,356. And if 38,356 is flipped, then we can target something more. It reject, and then we'll be aiming for again 36,950, flip it under, and we're gonna go down like this. So this is how the levels are, and this is how you plan your trades. And look at how it played out. If you just look at this algo, it perfectly playing out in the bounces as well. Look at bounces from 36,950 and then going back towards 38,356. Rejected once, rejected twice, and then we go for move on a downside. The downside, the fibs were shifting automatically, and then we had a levels of 36,950. It was a nice shorts, and then we also have a golden pocket around 36,600 for this whole move from here to here. So ideally the target would be 36,600 basically from the fibs perspective, but now the fibs have shifted, so that's what the target is. You see 36,691 is your bare minimum target, and then the liquidity pool is 702. So this is where if you really don't want noise, or you don't want like to play with for the boxes, you can just play with the lines. I like the boxes so that I can play with the basically what do you say, I like to play with slight buffer, actually. Basically, if I don't exactly want to miss it, because not necessarily that it might retest the lines, we can even reject from those boxes as well. Now basically what does this is what the whole support and resistance thing. Now I'm going to explain you what exactly the support and resistance, the logics are. Now the support and resistance is going to work in a such a way that first function of this support and resistance is identify the support, not only the latest support and resistance, but the historical support and resistance. The more the stronger levels are going to be, it's gonna keep that levels. The rest of the levels is gonna hide it actually automatically. Now how does it work? So basically, once a level is flipped into support or a resistance, it automatically changes the color. So right now it is red because we have lost 2 consecutive candle. We closed 2 consecutive candle. You see this 2 consecutive candle under 36,950. So this is an early sign that this support is lost. 36,950 is lost. And if the price starts going back under it, don't reclaim it. Then if the price don't reclaim 36,950 quickly, it's gonna accelerate towards our big levels of 35,360 and maybe even further going down to a 34.4 and 33,868 extension, Fibonacci extension that we have, 1414 and 161 at Fib. So basically, you know, how does it work actually? It works in a very real time actually. So if you see this candle over here, if you see that we did not close the 36,950, and hence you know, we were just retesting back testing, we were not losing it. So we were not losing it, and this was the green. So basically this was a strong support, and you may see that this is holding up very nicely. So if the price really not to want to pump up more, we need to hold these levels to pump up more actually. So now what happened was, if you see, you know, I'm just as soon as you see the price starts closing 2 consecutive candles, it turned that support into resistance. It changed the color to red automatically. So now it's like we have built a logic in such a way that it understands the flip. If the candle starts flipping it, it changes the color. If the candle starts flipping under, it changes the color. So basically now you are going to trade this support and resistance in a more confirmed way, rather than you have to worry about, oh my God, how do I know what is flip? How do I know that is flip? So this is the most important thing for you guys to understand, as to how this algo is going to guide you. It tell you whether this is a flip or not. The second most important thing about this support and resistance is the rockets. The higher the number of the rocket counts indicates that this level have a strong interaction in the past. It also tells you that the rockets, the number of rockets define the strong levels. For here, you have a 28 rockets, indicates that, you know, that these levels, the levels from 38,000 to 200 to maybe 38,500, slightly you can keep it this buffer. This level is like, you know, have been interacted almost 28 times and been rejected very, very harshly in historically basically. So if you see the levels, where these levels are coming from, these levels are actually coming from a year, maybe 2021. So since 2021, this level have been, you know, have a history of interacted more than 28 times, and 28 times these levels were rejected at those, you know, more than 28 times these levels were, you know, rejected. Yeah, so it tells you that, look, this level is strong. So if this level is flipped, the price can literally accelerate towards more and more upside. And if it don't flip, it deviates, then it's on a rejection, and then further we can go down. Similarly, over here, if you see the big green box, for some time you may see that the boxes are small. For some, the boxes are thin, the boxes are a slight wider, because we have auto buffer on. So it computes based on the levels, that which levels have more buffer, and it accordingly decides to keep, you know, the boxes. So hence, for some levels the boxes are wide, for some levels the boxes are thin. So don't worry about it. If you see here 11 rockets, which indicates that this was the levels from $35,691 to $35,000. Basically this $600-700 candle is where historically 11 times these levels were rejected in the past, and now this have been flipped as support, you know. So I'm just talking in a very layman language, okay? It's not exactly 11 times rejection. It's more than that. It's a strong logic behind it, because if you just count it, it's more than 11 times. So it's not exactly 11 times rejection, but I'm saying in a layman language to make you understand as to what exactly the 11 rockets indicates. It indicates that 11 times historically, from these levels, the price have been rejected strongly, 11 times. Strong rejections have happened, and once that level has been flipped, you know, the price have soared. Once the level have lost it, the price have dumped it. So this is how the rockets have been captured. So it tells you the more the number of rockets, the more stronger the level is basically. Now let me tell you, this is a very interesting feature. You won't ever see those features. It's a very accurate one as well. Talking about the third most interesting feature of this support and resistance over here is what I personally like about it is, it's not a static resistance. It's very dynamic, which means that, you know, every indicator you will find it in the space, it keeps on changing or shifting support and resistance from here to here, here. It keeps on changing it. My support and resistance don't change. It only, even if it changes by like few dollars, maybe like $50, $100. It depends on the how the accurate tops are formed, and it adjusts that levels, but it won't change it like it won't change from 38,356 to 39,500 or 37,400. No, it won't gonna have a massive change. It's gonna be like a slight changes. A rare sizing, if you just wanna even have it look on the historically as well as to how these levels work. If we do the replay, basically from here, let's see what were the levels when we were here. You see, we were here, we still had 38,356 levels, then we had 35,364, then we had 33,400. So basically every time this was the levels where we had strong levels of 23 rockets, and these level is still intact, and this level was slightly changed or shifted over up and here based on how the price have accumulated inside this zone. You see, if you just interacted how this 35,364 flipped and the price started rocketing. Just look at how beautifully the price hold at 33,400, bounce multiple times, give you long opportunities over there. Again, retest of 33,400, the price bounced up and it started moving towards the next resistance actually. So till the price is holding up 33,400, we are good, and we might be looking for more and more and more upside. So this support and resistance algo not only gives you very interesting scalps on every time frame, but it helps you draw the support and resistance so accurately so that you don't miss an eye. You don't have miss like any support and resistance based on just you have a biasness or something. But this is the most interesting part about this support and resistance. You see how the price rejected and how the first rejection happened again, and then now we rejected, as you can see here. At some point it turned a green, but that was like a failed flip, and then rejected back again. And the price, you also have a Fibonacci levels of 33,229. The price is holding up. 702, 786 is holding up, and also you have a strong support at 33,400, and the price now looking back to reclaim that levels of 35,364.5. You see how we are literally trying to accumulate under this whole resistance that we had of 35,364. The rockets have increased from 6 to 9. You see the strong levels, the fibs are moving up, and it's just simply trying. And then we got a volume breakout. The breakout is clear, but still we don't have a flip on the 1 hour time frame. As soon as the stop price starts, now we have a flip, confirmed flip, retest, and the price starts going back up towards 38,000. Again, we got a retest in the green box, and again we got a bounce from those. So now that the fib have gone up, you see the perfect retest of the green box, and then the price started reversing back again. Going. Any retest of this green box again would be a nice scalp, because we still haven't reached the 30,356, and now we have got some interesting small levels at 36,950. All the support and resistance are intact, no shifted a single dollar actually. And now we have a strong support. Then we have another 36,000. The price literally went to 886 Fibonacci levels, still holding the one, and the support was held at 35,364, flipping 36,950, retesting it, and then further going towards 38,356. I think this is how the support and resistance algo. You look at how many times this support and resistance of 35,364 is holding up. This 36,950 don't have actually any bases. It don't have rockets. There are 0 rockets. So you can say that it's not a strong levels yet, because it just started painting it. So I would just focus on the historical levels, 35,664 and 38,356. Just gonna play those. We are holding up 38,356, and the price is just looking amazing, and it's aiming for 30,000. Look at how many bounces we got from those levels. You can simply print those money with making just like taking some scalps at those levels, guys. So this how strong this support. Again, getting a bounce of 35,364. Look at the bounces you're getting, and look at the fibs are, it's accurately I would say predicting or holding, So I think this is what the most important part about the levels gets, you know, fixed. Days are levels are dynamic. I mean, they don't just keeps on flip flopping. No, I won't give let you know the logic of what exactly how this computes the levels, but just to try and understand that it's not like a breaker that if it flips something, it's gonna remove it. No, we will have that level in future. We will try to, and it's just going to keep and save those datas, and you know, as and when the price you know, proceeds that, and it's gonna increase your rockets. So historically, even if we are going in 2024, it's gonna tell you that how the price have reacted to these levels at that point of time in 2023. So even if you're going in 2024, we will be able to know that what has happened in 2021, 2022, 2023 for the Bitcoin chart. So that was the support and resistance, guys. I hope you got a fair understanding of how the support and resistance work. Now the next level is Fibonacci. We have two types of fibs, guys: long-term fibs and short-term fibs. So if I first talk about the long-term, if you just have a long-term fibs on a chart, the long-term fibs try to get a trend basically. So if I just have to, you know, on the support and resistance are, let's say if I just have to reduce the opacity for an instance, I want to remove the support and resistance. So I'm just going to remove it. Okay. So I have removed the support and resistance. So the long-term fib would be, it tries to capture a trend that where the trend have started. So on one more time frame, your trend started from 24,000 for this upside. And if this is the top, what will be the next logical golden pocket zone or retracement targets for where we shall be able to long? So that's like a big, massive, you don't have to drop fibs. It automatically gives you, in case if we start losing 0.886, what would be the target or the fib extension targets we shall be aiming for on the downside. So basically this is how the long-term fibs are going to help you. It draws on every time frame. It draws on 1 hour, 15 minutes. So for 15 minutes, the pump that we got on 38,000, what was the trend shifted pump? The trend started shifting from 34,131, and hence the pump started coming. You look that from these lows, if you just replay the fibs from here and look at how it accurately you know, draw the fibs. So previously when we were here, we had an auto trend. The trend started shifting from 26,700 with this pump, and we really wanted this 30,500, you know, basically retest. If you just go further, slightly up, just go down, go up, the trend, the long-term trend, that it tells you that with every candle passing by, the retracements are getting shallow. So from 30,400, 30,600, it's just gonna go up and up. So basically it tells you that, you know, 30,700 now, it tells you basically that what exactly the trend, the price is moving, and it tells you that where exactly the bigger trend is trying to shift actually. So we are right now very bullish at this point when the price was here, because now the golden pocket zone and the liquidity pool have been shifting all together on an upside, giving us a very little space on the hard-term time frame to dump actually. So the price is very actually bullish, you know. So that's what we have the hard-term time frame. Fibs, it accurately gets your fib on the daily as well, guys. You don't have to draw it even if you don't know about it. Look at the lows, look at the highs. It accurately predicts the fibs, and also gives you, in case we go for a bull run, we start flipping up, it's just going to give you an upper high target of 161, an extension of $100,000, and you know, so on and henceforth actually. So basically this is how the fibs on the long-term time frame works. If you look at the weekly time frame as well, the weekly time frame fibs also works nicely, but for that we need some more data. So basically you can use other charts like Coinbase for an instance, and once you have a Coinbase chart, you should be able to you know, get more interesting reads. So just have a, let's see, if you just have BTC USD chart over here on the Coinbase, you'll be able to see that more accurate. You see the low was here at 3,800. 786 is where we personally bounced previously at 17,798, and then we started accumulating from 1779, and 15,000, it started breaking out, flipping, and how the flips are, golden pocket zone have been flipped as well. Basically the whole retracement target for, and then they basically tells you that in case if you're bearish, if you start dropping under, the price can literally soar back towards 0.886. We are still bullish, still we are above 3,800. The trend is still bullish, and we are still aiming for more and more upside. This is how the things works. If you really want to draw the monthly as well, probably it will be able to draw it. No, it won't be drawing it because of the lower number of candles, but overall I think it's good actually. You get a lot of interesting things over here. Talking about the, now let's go to the Bybit chart back again. Talking about, now let's have deep dive onto the short-term fibs. So we talked about the long-term, now it's about the short-term. So basically we don't only have the long-term fibs. Basically you should be aiming for, let's say if the long-term fibs tells you that you should be aiming for 30,400, 30,000. So that's like a big long-term target. But for that, what are the levels we need to breach, or what are the levels we need to go for? So the long-term, short-term fibs tells you that, look, hey, this is where the initiation of the pump begins. So now it's like we don't need to wait for like 20,000 or 18,000. We just have to look for this golden pocket zone of 29,600 in case we got a pump actually. In case we get a retracement, like if we get a retest of this, it's like a good nice retracement, and we can literally long from there and ride it up, because the trend line also suggests this is the trend line that we have. And if we do happen to get a retest like this on like a trend line, we can likely going back up after a retest of this trend line. So it tells you on the hard time frame. Now if you do get the 15 minutes chart, it automatically draws you the fibs based on the 15 minutes time frame, and it's a very short term fibs actually. So what it tells you that, hey, look, your trend started dumping, your reversal started happening from 37,900. So if the price stays under 37,764, fine, the 886 fib is fine. But if we start flipping the 37,760 fib back again, we can literally start pumping to 30,200, 30,390, and maybe even 30,600 one more time. So that's what it tells you, and it's gonna keep on changing fibs once it starts breaking fib 1 level. Once it starts breaking fib 1, it automatically going to remove this fib and going to look for another new Fibonacci levels. So basically every time you just have to keep remembering the 12721 for 161 at fib. The rest all fibs are going to be same, but it's going to change the extensions based on the trend actually. It also works on the 5 minutes time frame, guys. Like awesome, it works for a scalping purpose. Now these fibs are independent fibs from the one that we have for the price action algo. The price action algo fibs are very different. It draws fibs based on the structures. Over here these fibs are independent. It don't have anything to have with the structures. It draws based on the breakers actually, breakers of support and resistance, that's all. So this is what we have for the hard term time frame and lower term time frame fibs. You can see that this was the initiation of the pump. The price made highs, lows, not exactly lower highs, and still this was like a lower lows, again lower highs, and then the trend started shifting, higher lows, then again you made highs. So higher highs, I would say, if this is higher highs and if this lower higher lows still intact, then the price is going to go here towards 618,702 and 786 fib, and maybe even 886 fib, and we hold these levels. And if you need to pump up, this is how the price is going to go up from there. So basically this is how it tells you how the fibs are very important. In case if we start losing 35,900, if we start losing these levels, the price is going to go down. Now you don't have to use fibs independently. You have to use fibs along with the support and resistance, guys. So basically, if I just have to tell you that you look the fibs over here, I'm just going to have an opacity of 10 for a line. Just gonna keep it 100. So in case if you see here, we are having 36,950 levels. If this level is lost, of course we're going to aim for 886, and if the 886 Fibonacci level is also lost and we go for downside, this is the strong levels again at 35,364 in this green box. So we're going to go down here to 1272 more probably, and just trying to flip it, hold up here, and probably going to give us that bounce over here, or start flipping it under these levels and start dumping more. So basically this is how the fibs are very crucial. You don't have to use it independently, but you can use it in conjunction with the support and resistance. The more the golden pocket zone or liquidity pocket aligns with your support and resistance, the more you should be using fibs actually accurately as a confluence. The next important thing, so this was about the fibs for long terms and short terms. So now the most important thing that we have, again, the third is the volumetric candles. Now this volumetric candles is one of the most unique thing you will ever see in this whole crypto space or on the trading view indicators. You won't find it such sort of a most accurate volumetric candles anywhere. I'm not kidding. You can always you are most welcome to find it by yourself, use it, check other indicators as well. But this, and compare it to my indicator, you will see that why my indicator it gives most accurate volumetric candles. What are the volumetric candles? I won't tell you what exactly is the logic, but what is the volumetric candles? It tells you the levels when the price pumps or dumps, whether that is supported with the volume or not. If the pump is supported with the volume, and if it is trying to break a resistance with a volume, it clearly indicates that the price is bullish, and it's very bullish, and it's trying to flip the strong resistance. So it's time for you to literally start buying. Similarly, if it is dumping with a huge volume, which indicates that the price is starting to break the resistance, and we may be literally looking for more and more downside if we also start breaking further resistances. If that resistance stays at a resistance, then we are going to go more and more down. So how this volumetric candle works actually in a very simple fashion, very simple fashion. So you see, when we were pumping here, we had a resistance. So out of nowhere, we got a huge dump. The dump literally happened over here. The huge volume, the bearish volume, volumetric candles are drawn or are colored in purple, and the bullish are colored in white. So that's how the volumetric candle are colored. Now, it automatically draws you the, gives you how you should use these volumetric candles. Even if you don't use anything else, this volumetric candle alone is going to help you make a huge amount of money simply with this logic. These volumetric candles, once it paints you that candle, it forms like a support and resistance. So this is your resistance and this is your support. So after dumping, if the price starts going back to these levels and it start rejecting these candle highs where the volume started dumping, or it start rejecting, the price is more likely bearish, which means that this dump is not like a shakeout or something, but it's a more accurate dump, and the price is going to follow till it don't flip the highs of where the initiation of the dump happened. Till it don't flip it, we are still bearish. It is for shorting, and the price is going to start dumping down. And the more it's going to act like a support and resistance as well. You have these lines over here. If price rejected, come back down to these levels, the low of this candle, as you can see, bounced up very nicely and just ranging it again, rejected at the highs of the candle, closed back under. A retest happened over here. That's where the candle close happened, rejected once, twice, and then started dumping to another support that we have for BTC. So that's how the volumetric candle, this was the bearish candle. Also, let's talk about the bullish candle. So the volumetric candle for bullish, if you really want to see the bullish or volumetric candle, so this is here. So first, what happened? You got a sharp dump over here, and this is exactly where your volumetric candles are. The huge, so this is like a box. You got a sharp dump over here. Two candles, a huge volume happened with the two candles. A huge sharp dump happened, and then now you might say that, yeah, I can understand that this is a volumetric candle, but why this small candle is a volumetric candle? Now this is a logic. Well, you might with your naked eye might feel that this is not a volumetric candle, but look, people are literally shorting this support, the strong support that we have at 24,900. Look that way. I mean, it tells you that people are literally shorting the support. I would have agreed if we are literally shorting under the support, then yes, the price may literally go for another support. But if you're shorting at the support, what happens next will be like a huge strong liquidation. Now this candle was not even bigger than what we had a dump, but it painted white. Why? Because based on the logic, this was like, this pump happened. This was not a fake pump. It was a strong pump. It was not like a pump that like a bullish checkmate or something and it's just going to come back down reverse. This reversal would have happened if this pump was not with a white candle actually. Very likely. So now what is happening is this huge white candle came, we closed above with a very nice bullish candle, which means that this was like every sellers got trapped. Whosoever have sold here or shorted here, they are got trapped and now they are in the process of liquidating. So when they started shorting here, the price finds support here, holding up, and again it tried to break out with a flip this support with a huge another big white candle. So you have another support that is forming. So till we are above this white candle as well, the price don't close under or flip under, we are bullish. So now you have two bases. This is for base 1 as support, base 2 as support, and the price is holding here. The price holds, we need to go up and up. If we would have lost these levels, we would have gone to these levels of green support, because we still have that strong I would say white candle over here. So the initiation of the white candle was here, and this is where the white candle started evaporating. So we have a strong buyers here, found the buyers, and they are liquidated. Strong sellers have been trapped as well. So basically this is a strong indication. The next white candle was an indication that we have a strong support. The candle is holding up, the shorters are trapped, and the price needs to pump up more. So this this candle volumetric color itself is a strong independent indicators. If you use it wisely, it don't have anything to do with the support and resistance. But if you really want the big levels on the daily time frame to know that if that level has been perfectly flipped or your breakout happened with a strong volume or not, you look at these candle had a strong when we were at 15,000, we had a good strong amount of sell-off happening, and everyone was selling at the bottom, sold off, trap, and the trend starts shifting from here. From November 21, you see the trend line started drawing, the trend started shifting up again. This level pumped up. We tried to break out with a huge buy, rejected, but holding the support. And the next, you see on the daily time frame, same logic applied. This was the initiation of the a huge volumetric candle. This is where the candle rejected, so now acting as an order block. We are holding these lows, the price starts going up. Similarly, if you look at the next candle, any other candle that we have, perfect. When the 31,000 big pump happened, the previous pump was like a test pump. There were no buyers over here. There were no big volume coming in. The volume was okay. There was no big volume. But when the price started flipping this 29,300 big support or the resistance that we had, once it started trying to flip it, you see the big volume came in. So now that volume came in, breakout like this huge 30,970 candle resistance was broke out with a huge big buy. This is now on the daily time frame. You have a strong support at 33,163 and 29,953. So in future, until we are above this, in future, the price, whenever the price in future goes to these levels or even go down inside a little bit, we're going to get a good bounce from there. The bounce can be anything from 10%, maybe even to to the big resistance of 39,700. If the price starts getting acceptance under these levels back again and tries to flip it under, then we have a problem. Then probably we're just going to move down. But there's a huge buyers, huge candles over here. Also, we got another volumetric candle above this. You see, we had a huge volumetric candle. The price starts going back, retesting the lows, did not close under daily. Hold up, a big green candle happened and the price pumped. And again, come back down, retest the lows, price pumped. So this is how the volumetric candles are very, very helpful for you to determine whether the price broke out was backed with volume, or the breakout literally happened without a volume. Now you can also check this historically as well, that how the breakdown and breakout has happened. Look at the breakdown with a huge volume whenever happened in the past, and look at every even the top, literally we were not having that big volume on the top as well. But look at this breakout when it happened from these highs. It broke out with literally, because a lot of shorts got trapped here, 35.7, 35, 34.7, a lot of previously, and then breakout happened, the price went literally to new all-time highs. So that's how the volumetric candles are very, very important for you guys to analyze it. And it's just an independent tool as well. Probably you can use it as like taking scalps as well. So this is what we have for a volumetric candle. It works on every time frame, ladies and gentlemen. The third thing that we have here is the trend lines. The trend lines are very, very important. You can use these trend lines, but I would say if you are using trend lines in conjunction with the support and resistance, so it would be very nice. So the trend lines, we only have one trend line, like the normal trend line that we have, but I have made in such a way that the logic for various time frames is fitted in the logic itself, in the indicator itself. So if you go for 15 minutes, it's going to give you lower some time frame trend lines. If you go for 1 hour, lower some time frame, 4 hour, lower some time frame, anything above 4 hour, it's going to give you high some time frame trend lines, like a bigger trend line it's going to draw for you. So if you go to the daily, it's going to go like a big trend line from the bottom, and it's going to tell you that what exactly where exactly the support would be. So basically, if you go down to 29,200 or 30,900 would be nice support, but if we go for 29,300, we have a trend line support as well. In January 2024, if it start dumping down, we have a strong trend line. The trend line is up. We are bullish. This is how it tells you. Also it captures the breakout. So when the price, we had a trend line over here. When the price starts breaking out of this trend line at 17,000, we held it as support at 16,200, and then we started reversing. This was a breakout of the trend line actually. So there are three types of trend line. The red and green is the pure trend line. It identifies a breakout and support, or a breakdown. Okay. The purple line is now an interesting thing. It identifies a triple top. It identifies a 3 drive pattern. It identifies the the rising wedge as well. So basically these the dotted line that you're watching is a very crucial. It identifies basically the big reversals actually. The drawing of this trend line is slightly off, because the trading, you have certain limitations with the drawing, but we are trying to find a solution for that. If we get it, would be nice. But this indicator tells you that, hey, look, this was the highs, you got another high, so the third high is literally your 3 drive, and this is how the trend line should have been. Ideally, this is how the trend line should have been. So what it tells you, this is how the trend line should have drawn. This tells you that it broke out of this, retested, and we are going up. Ideally, this is how it should have, and this would have drawn perfectly when you would have look at the trend line this way. So when we were here, what sort of a trend line we had? Let the indicator tells me. So if we just go slightly above, once you see we had a trend line, this trend line, the trend was bullish. We were bullish, and now just hold on. Once we start breaking these highs, this trend line will start drawing back up. So it tells you over here that we are breaking out of these highs. Until we are holding up, we are gonna go up. And when it identifies triple top, we don't have to go for like a big go above 1618, because if we go above 1618 of these highs, it automatically invalidates it. So this trend line is very, very crucial, guys. Also, if you look at the 1 hour time frame, it draws automatically the trend line as well. Just gives you a perfect breakout you need actually. Currently, the 1 hour time frame is having a resistance over here, and it gives you also the 3 drive pattern have been detected. So this is like a drive 1 highs, drive 2, drive 2 over here, and this is like a new highs that we have already. So This is a very nice 3 drive detection, or I would say a rising wedge probably, but a very nice triple top for now. And the price perfectly rejected as well from based on this purple trend line that we have. Also we have another trend line connecting highs, a fake breakout, these lows. So till we don't are under this trend line, we can look for more downside like this. Once this trend line is flipped, we can go for 39,000, maybe even 42,000 as well. So that's what, like, a big breakout can literally happen from this trend line. So the trend lines are very crucial, guys. You don't have to have any biasness playing with this trend line. If it breaks, take it. If it don't take it. Similarly, over here as well, it got perfectly triple top. This was the highs, and here. If you replay here, if you see here, once the price start, breaking the previous highs, as you can see, we had a triple top pattern over here as well. Another trend line that we had. When the price starts going back close to sweeping this highs of 37,896, automatically it's going to have that trend line perfectly drawn at this place. You see now it perfectly gave you the first trend line that it draws from here. So if this trend line is flipped at 38,100, the price is going to push up. If it rejected, it's going to be like a perfect short opportunity for you guys. Even if it's like a scalp, you have a support of this trend line, a breakout of this trend line. You see this was like a and rejection literally happened. You see very nice rejection. The breakout literally happened. This was a breakout trade. The breakout literally happened. A retest happened, and the support was there, and a price pumped up. So this is like another bullish trend line. So basically these trend lines are very helpful in every time frame. You can play it like 5 minutes. You can play whatever the time frame you want to play. You can play. The trend lines are very accurate. The logics are very different than what the other indicators are having for the trend line. And even if you compare my trend line logic, you can have another trend lines on this same indicator, and you will see my trend lines are drawing more realistic as well as more accurately. Actually, the only issue that the lines are extended fully, so we are working. I don't want to extend that lines fully. I want to just probably cut the lines here so that then the charts don't look messy. You see this was like a breakout trade as well. When we had a dump trying to break out, reject, and then the breakout literally happened. A retest happened. There was a huge support. The support was flipped at 37,200. You would have longed it, and you would have ride it for like 38,400, and maybe even you can ride it till even 37,900 as well. So you had a nice trend line flip plus support flip. Both the support and trend line flip long, stop loss under the support, and then read it right. That is a good risk reward you can ever get it. So basically this is not only about the support and resistance. You get a lot of good things here. You get trend lines, you have a lot of confidences. If you have trend lines, you simply on the trend lines, you just play the trend lines. You have Fibonacci levels, you have volumetric order blocks, so you literally get a perfect pack. So now it's like, for you as a beginner trader, I've explained in this as to how to use this indicator. If you start using it independently as well, amazing. But if you are also using the price action algo, and if you use along with that as well, then it would be amazing as well, because the price action algo gives you, the perfect the trend reversals or continuations. So let's say if you're getting a bearish chalk, like here, you get a boss EXT, a pin bar candle forming above support. This is the support levels, as you can see, the 36,700. On the 5 minutes time frame, you got a boss EXT with the pin bar, another boss EXT with the pin bar. Every pin bar is getting formed, another boss EXT with the pin bar. Every pin bar is getting formed at the support. Means the price, there are buyers. The price is finding buyers inside this support. And if you literally get this bearish chalk at the support, ignore it, because it clearly indicates that till we are at support, you don't literally short the strong support, because you have 20 rockets. So if you're getting a bearish chalk, if you would have shorted here, you would have either got out with 1 hour over here, or basically you would have stopped at break even. But let's say if you know that we are literally, the bearish shock is happening at a support, it's better to long, because we also have literally like the previous month highs falling inside this support levels, basically a good levels to short. We also have 5 minutes fair value gap into the support. It's a good scalp for long, like a contrarian trade actually that you are taking it. That's what. Now the chalk is literally happening around, or I would say under the resistance. So if this chalk needs to literally play out, and with a bearish pennant, so if this needs to play out, and if you're literally trying to long here with like a resistance, you might literally get stopped out. So what you need to do is you need to wait for a retracement to come back down to golden pocket zone, maybe 702, for this chalk to plays out. And then probably you can go for push up. You take profits here. Once this level is flipped and the trend line is breakout, you can continue. If you don't, take profit and just run. So that's how this is a very small or basic examples of how the support and resistance indicator along with the price action algo can be used very, very effectively to not fall into wrong trades, or you can improvise your winning rate as well. And also this winning rate improvisation is going to help you in making good money. Your P&L will be green every time, so you're just going to keep on adding profits and you're going to minimize your losses. Actually, that's how this indicator is going to be very, very important. So as you can see that 36,954 levels on the 15 minutes time frame is seems to me like flipping for now, but it is going to confirm in next 4 minutes. Once this candle also close above these levels, if it's flipped back, it can be early indication that this level is flipped. And even the trend, we are at a nice trend line over here as well. So if we start flipping it on this trend line, we can look for a scalp towards 37,473 towards current weekly open. So that's what. If it don't flip and loses start back again, we can short it, and you can short it towards maybe even the next big support that we have around 36,200. So that's what this indicator along with the trend line and price action algo tells you. But the price action algo is purely based on how it's going to confirm basically if there is a bullish chalk happening. If you just look at on the 15 minutes time frame, what do we have on the 15 minutes time frame? We literally had a boss ext. The boss ext formed under a support, and if this boss ext and also played out actually, if you would have this boss ext, if you would have had a boss ext and you would have shorted here because it started from these levels, you would have literally made a good money. Then again shorted back, you would have made again good money. So two shorts clearly on the 15 minutes time frame. But then the price starts going back and start the flipping 36,950 levels over here, the support. And also it's turning the support, the resistance is turning green actually. If you just look at here, it was red earlier, this level was red. You see this level was red, and when it starts going back above, it's starting to flip it, which means that the resistance is like a fake breakout, a breakdown trap. So don't now short it. You already make good money with shorting the scalps. So on the price action algo, 2 perfect scalps. One is here, take profit. Here, take profit. The 2 perfect scalps for like more than 5 hours overall. If you would have played it, wait for it. If it flips, now we wait for chalk. If you get a bullish chalk, once the price starts breaking up like these levels, I damn sure you're gonna get the bullish chalk, come back down, retest these levels, you will get another fibs for golden pocket zone, a bullish chalk, a retest of golden pocket zone, you have fair value gap, you have auto block, and you have a support, trend line break, everything aligns perfect long, let it right to these highs. So that's how you can use this support and resistance indicator along with the price action algo. So that's what it is, ladies and gentlemen. This is the perfect pack for you guys. You get every damn thing over here. I hope this video finds helpful, and I hope you really like it. So if you really want an access of this price action algo or the support resistance indicator, we also have the divergence indicator, which is the most accurate divergence indicator as well. It gives you over here when the price was here at the previous month highs, it gives you that RSI stock is having a bullish divergence, so the price literally pumped up over here. So It tells you, that when the early signs of a reversal over here as well, the OBV was bearish, stochastic was bearish, dumped over here. The RSI OBV stock magnetic histogram was bullish, the price pumped. So this is the indicators that we have, ladies and gentlemen. If you really want it, just hop into our Discord, join it, and you'll get all access to all the indicators. It's just $21 a month, one of the best investments you can ever get it. We also have bots, guys. Right now we only have divergence bot, the most accurate divergence bot, I would say. It gives you the confirmed divergences, and for various things, I'm personally using it. And a lot of members are using it as well. And the another bot that is going to come in few days will be the breaker bot, guys. So I hope this helps, and I hope it helps you in understanding how this support and resistance indicator work, ladies and gentlemen. So thank you so much, and for giving me an inspiration and motivation to work harder to make this thing happen, because I honestly, if you were not there, then I would have not made such sort of a beautiful indicators and algorithms for you guys. So use it wisely. I'm not charging anything extra. Doesn't mean that you don't use it properly. Use it wisely. Take it seriously. This is like a free money you get it, guys. A free fucking money. If you don't use it wisely, then I don't know what exactly you're gonna do with it. But this is like a free fucking money. Don't let it just waste. Actually. Thanks a lot. Have a nice day.